Hi guys, how's it going? I know we haven't done a webinar in a while, and I have a lot to cover for today. So rather than me doing a live webinar, what I decided is I jot down my whole plan for the webinar, and I definitely do know what you guys want to know. So one by one, I'm going to talk about everything, and this will be posted as soon as I get done. So first, let's go over the market. I'm planning on going over the market in this webinar. So basically SPY. Um, I'm going over IV since it's earnings season. So we're going to see drastic change in IV numbers. Then I did cover active trader once before in the webinar, but a couple of you guys asked that you guys don't understand the idea, so I'm going to do active trader again. Besides that, I'm walking you guys through one of my AMD plays from January 16th, along with reading the tape on that play. So that covers two of my parts. And after that, I'm going to show you guys the earnings calendar, ER calendar, and the events that we're looking at for next week. There's a few like jobless claims and Fed has announcement. So 1, 2, 3, 4, 5. Oh, I missed IV. So actually 6 in total. So we have 6 things to talk about. Besides this, I'm not talking about any particular stock today. Not gonna go over any stock that I'm gonna be playing tomorrow. What I'll do is for that at later in the night, like every Sunday I will be going over my watch list, and once I have a plan, I will write it down and post it in the group chat. For the past couple of weeks, I've been out of the track too. I haven't got a lot of time to update you guys on your end. Not saying that I haven't traded myself. Yes, I have traded and I have made plays, but not the way I do, not very actively since I had a lot to do. But now jump into the next week, a lot of things are cleared and now I will go back to trading with my clear mind. So as we speak right now, let's look at SPY. As we all know, market has been running. And what SPY has been doing is SPY has been running too. One thing we see is, again, all-time highs and then got rejected. Friday, there was a major sell-off. What was the reason behind this? The reason was right here. If we go over here, around this area, right. Stocks saw on virus outbreak Dow Jones virus outbreak, right? And Intel was the one that stock ran on Friday and aftermarket Thursday, along with NVIDIA and AMD. The whole sector was running because of their earnings. So, but as far as we know, Friday we had a sell-off because of these certain things. That there is fear in the market, and market is correcting itself. At the same time, market got a reason to correct itself. These wires, when this news came out, it came out with a few people that got caught with it. But moving forward, by the end of this week, we had got a lot more news. And moving forward in next week, one thing I can definitely, I'm not sure, but definitely I can think of or say is that I do market coming back down a little more before it goes up. Why? What's the reason behind that? Okay. So a couple things to look at, right? Let's look at past about 1 year. All right. So one thing always to focus on is the price action and the volume, right? When the market was running, we were seeing consistent amount of volume in the market every day, right? But whenever we were having these small days when market didn't have a gain, but we ended up losing something. It's not that like we saw crazy amount of volume like this, or like this right here. But at this time on this Friday, what happened is market sold off big time along with the futures and everything right now, which are also down. So what we need to keep in mind is we need to keep in mind that a lot of traders out there are looking at everything along with us, like these EMAs and SMAs. So my blue line is my 6 EMA, my purple is my 12, my white is my 15 SMA, and my orange line is my 50 SMA. Another thing I see is if you go back, there was one time in past what days? About a month, in past 1 month, when we closed below the 15 SMA, and that was a gap down, but we recovered ASAP. Okay. If we go further back, the last time we were below 15 SMA was this was the this was October 2019, middle of October, which was another earnings season around that time, I think. So around this time we were below this level. So there has been times when we got rejected and bounced off of these levels, but if we go further back, we will see that every time the market runs, it kind of corrects itself with 50 SMA. It runs again, it corrects itself with 15 SMA. Runs again. So every time it's going away from 15 SMA, it is approaching it back, hitting it back and bouncing off of it. Or even if it's going below it, it catches up and goes above back. So right now, a lot of traders are possibly looking at 15 SMA as a number where they want market to come back to, so they can start restocking their money in these stocks, and investors can start buying again and the big money can start flowing again. But right now, big money needs a reason just to sell off and come back down to the levels where they want to be, because it's just too much for them. At the same time, I'll go over sectors and I'll show you guys what happened on Friday too. So this number right here, obviously, is going to be moving accordingly when as soon as we move. But this number should be something we should be looking at. A break below 15 SMA on a daily should be another thing for us to look at, that okay, now we're really getting into a correctional territory. Not a sell off, not that market is going to go to zero tomorrow. No, market is not going to zero. All we're saying is market is definitely going to hit some levels where we can get more comfortable with the numbers rather than seeing things going up, up, up. Because if you think about it naturally, right, what's the basic natural movement of market? Upside. If there is no catalyst, if there's no news, if there's no negative, positive news, market is slowly, slowly going to climb up. Why? Because people have no reason to sell their things, right? So in any condition, we see market climbing up. Now, what we don't see is we don't see market selling off without a reason. We always have a catalyst, a negative, positive, something going on behind the market that we see that, okay, now market is selling off because of XYZ reasons. Now, if we didn't have this virus news, we probably wouldn't have seen the market selling off. The next thing was for us to look at the Fed and the earnings, because now we're in earnings season. That's another thing that plays a big role in the market. When I walk you guys through the calendar, you guys will definitely see how many earnings are getting announced next week, along with the market conditions. So these big names are definitely going to put a big impact on the market. As far as right now, we have a catalyst for market to come down. But if earnings turn to be good and better than last quarter, then rather than going this way, it can go this way. and we can definitely see some changes in the market. So that was my basic market structure. Let's go over a weekly chart one time, 3 year, 1 week. On this, now you got to think about it this way, right? Think about this last red candle and the volume. Don't just judge the candle by what happened. Let's go back to the daily chart. I want to show you guys something that probably you won't think of. And that is that if I go back to the daily chart, my week started on 1/15 or 16. My week started on Monday, which was 17, 21, which was 21. Okay. So when we started our week, the week started off good. We had all-time highs. We gapped down, recovered the day on the third day, and Friday we gap up again and then sell off. If you think about it, look right here. First day, all-time highs, gap down, open around this area right here, and then gapped up, opened, and then close around this area right here. So it's been a crazy week around these ranges, which is about 333 to this level right here, which is about 327, 328 level, right? So if you go back to the weekly chart, one thing to look at is definitely right here, that this week was 4-day week, first of all, because of MLK Day. So first thing was it was a 4-day week. Secondly, it's not that we're saying that weekly chart is showing any kind of momentum towards the downside, but what it's showing us is that, okay, next thing is if I see the week next week like this, I shouldn't be surprised to the week to close anywhere around 319, which is the 50 SMA is lined up on the daily chart. And that is where a lot of people in the market want the market to be at, because that will give us a better understanding of the market to be moving towards the 3,500 area, because right now we're around 3320, 3320, 3330. A lot of market makers and a lot of people in the market, they're looking forward to 3,500s, which basically I'm saying is our SPY should be at 350. But for us to climb to 350, yes, a retracement is needed. And that could be two things. That could be the 15 SMA on the weekly chart or the 50 SMA on the daily chart. That's it. All right, so that was the basic structure of market that I wanted to cover with you guys. Now let's move forward to the second step, which is IV. So, all right, as soon as I go back to the trade tab, I see that Tesla is open for me. Good. I want Tesla to be open. I want you guys to look at this number right here. 130%. The IV is 130%. So if I open my tab for trade, what am I seeing is right now at the money, contracts are running for $37, about $38, which is about $3,800. Why? Not because the stock went up and the contracts are getting more expensive. Yes, that's one of the reasons, but IV right here is playing another big role, and it's going higher by the time. The reason behind that is Tesla is supposed to be announcing their earnings next week. Now, with the case of IV, what happens is IV is something that can make you or break you. So whoever was swinging the contracts for Tesla from maybe, let's say, last week or the week before that, they're probably making a lot of money right now, because their contracts, the contracts they bought, were probably way cheaper, and the IV was way lower, maybe around 40%. Now, since the IV is at 130%, two things to keep in mind is, let's say tomorrow you get up and you say, I want to buy a contract for Tesla. Let's say if you say Wednesday, I think Tesla's announcing their earnings on Thursday. So Wednesday, you buy a contract of Tesla around this, 560. Fine, sure. Makes sense. You bought the contract for this month. Just think it's Wednesday right now, and that's what the contracts are running for. Next thing is, if next day when Tesla announces the earnings and IV goes down because the earnings were not met or the number of market makers wasn't met. So this is the number that market makers are expecting in the stock to be moved. So they're expecting almost a $65 move on Tesla. If this move is made, along with looking at the move for the week that is expected by over here by the IV, which is $74. So if we are making this move in the market, if this stock Tesla makes a move of 74 plus and minus on any side, we shouldn't see a big change in the IV. But does it mean that IV is going to stay high by the end, until the end of the week? The possibilities are very low. No. IV is possibly going to down. The only way you can save yourself is if IV goes down. But luckily, what happened is the stock moved in your favor, and let's say it moved from 560 to 580. Now you're $20 in the money. So your contracts are going to be reasonable in the price. At the same time, when IV is going to decrease, the value of premium is also going to decrease. That's one thing to keep in mind for all of us, that IV can mess up everything for us if we're not looking at the right thing. So right now, Tesla IV is really high. Let's go at AMD. AMD is supposed to be announcing their earnings. All right, look at this. 95%. $2.37 for the contract of AMD. That's crazy because AMD usually goes for $1 and something, some change at the start of the week and goes by 30-40 cents by the end of the week. So right now what we're seeing is IV is really high, and I expect it to go even higher from this. Apple, okay. IV is at 55%. Not crazy. At the same time, not great either. But it's definitely going to go higher since I don't know if they're, I will go to the calendar right now with you guys and show you. But see how they're expecting a $17 move. So this week, there's a $17 move expected. Move is going to be made because earnings are there. Either Apple is going to go up like this aftermarket or like this aftermarket. These big stocks, when you see earnings, are after every earning, that's what happens. It either flies or either dumps and gaps down big time and next day is in the day. We're not. I personally has played a lot of earnings in past, but this quarter I'm probably not playing any. If I am, I'm going to play it by hedging my position. I'm going to hedge my positions, and then that's how I will probably play it, if that's the case. But as far as you see right now, look, there is a $17 move expected, along with 55.62 IV. Now keep this number in mind, and you guys obviously will have this to watch it again and again. On Monday, Tuesday, I want you guys to go look at the IVs again. There is going to be a change in IVs. Now we covered Tesla, Apple, AMD. Let's go over BA. BA has a catalyst, and BA is supposed to be reporting their earnings. BA chart is kind of interesting, so I'm going to go on the chart and I'll show you guys something real quick. Now, this is one thing about BA right here. So this level was something a lot of us wanted the stock to get below it. Why? Whenever the stock goes below this level right here, it bounces back up. So this is around $300 level. This level is around $300, yes. And in this case, it's not that it bounced off just because the buyers wanted to be presented. It bounced off because there was a catalyst behind it on Friday. And stock apparently ran big time, which is okay. And this is a weekly chart. So if I go back on a daily chart, we will have a lot better understanding. And let me go here 1 minute. All right. So that's all right. So as far as you know right now, sell-off started after the negative catalyst, and then now it started reversing Friday. We had a really good day Friday. Saw in the second half of the day, stock started running. But now, something to keep in mind is catalysts are coming and going. Earnings are going to be something that's going to drive the stock go up or down. One thing right now I see is in BA is that last time, same thing was happening around this area, 390 areas. Earnings was right here. See right there? So a lot of times at this area, 300, from 320, 330 to 300 is the area where buyers are buying BA a lot and they're not selling BA. So earnings are going to give us a direction for either side if it's going to go up or down. If you want to gamble, gamble on either way. But if you don't want to gamble and play it right, then wait for the next day for the stock to open. And then big moves are always made when the next day after the earnings too. That's not something you should be worried about that, oh, I missed a big move. That's not how it works. If, let's say, even if you, let's say, for argument's sake, right here, let's say this was earnings, stock closed at 340, stock opened at 323. One could say that, oh, if I had one put on this, I could have made X amount of money. Yes. But were you willing to take the loss of 100% on that put, like a max loss? Are you willing to take 100% loss on this max put? If you're saying that your put is $5, which is actually $500, so in case if this put was supposed to go your way, but it went this way, are you willing to lose all of this 500? If yes, then gamble. No one's stopping you. But if no, then you shouldn't gamble because this 500 is going to go to drain and you won't have anything left. All right, so I covered SPY and major parts of IV. Anything more I see in IV and any kind of drastic changes or anything coming up, I will definitely also let you guys know about that. Now, let's go over the active trader. So I'm going to go back. I'm going to go to my flexible grid right here, and I'll show you guys something real quick. So when I go to my flexible grid, what do I see? So personally, this is my personal setup. The way I trade every day and the way I keep my charts. How am I trading? I have my 1 minute right here and my 1 minute right here. This 1 minute has nothing but my chart and my VWAP. This 1 minute has only 9 EMA. Then I got 5 minute right here and another 5 minute right here. This 5 minute has nothing but Bollinger Bands. And this 5 minute has my 4 of the EMAs I use. 9, 21, 50, and 200. And all of these are EMAs, not SMAs. And I do put RSI on the bottom. The reason behind that I put RSI is this chart right here I have is that I move it forward to 15, then I go to 30. At times, I'm just keeping it at a hourly chart because a lot of times when I'm day trading, I'm always looking at a little bigger picture, not that weekly or daily, but I'm looking at something that can give me better understanding of the action. Like for right now, if I was trading something and I saw the sell off and I got in around maybe let's say these areas, just give an example real quick so you guys know why I'm using it. Now I know that okay, I'm willing to lose some out of it for me to gain another big chunk of it, right? So next thing I know is, okay, it bear flagged on 1 hour. Now I should see it going more down. So I'm not getting out of it. I'm going to be in there and I'm probably going to scale myself out so I know I have cushion to be back towards. I have a cushion to lay on now. So that's how I look at the hourly chart all the time on this picture, on this chart right here. That's my hourly frame. Bollinger Bands, VWAP, 1 minute only with 9 EMA. That's it. And this one is something that I'm moving forward from 5 to 15 to hourly most of the time. That's how I move this. Now let's go to the top. I got my level 2 right here, time and sales right here, and my active trader right here. So I did go over active trader before, but let me go over it again one more time. So let's say we were trading AMD right now, and I'm on AMD's chart, right? So when I'm trading AMD, I have everything in front of me. Now I have different time frames. I have my EMAs, I have my VWAP, Bollinger Band, and this is something you can do from laptop. And I have screens, so I have 4 of these screens like this, like whole setup, different 4 of these on different screens. Now, the way to use active trader. Let's say I was to trade AMD. What I'm going to do is I have to go back to the trade tab, right? So when I go back to the trade tab right there, and I write AMD on top, that means that AMD, I have a chain for January 31st, option chain for AMD. Now, if I want to trade AMD through active trader, or if I'm trading, whenever I'm trading, I personally use active trader. I never use the regular order. The reason behind that is, first thing is, most of the times I'm not making my order as soon as I see the stock moving. I'm basically staying ahead of the game. And let's say the stock is around this area. I want to see it getting above this area. When it's approaching the area and hits my alert, my job is to just keep in mind that, okay, Zan, if it gets above, if it gets close to this alert, what I'm going to do is, right now I see the stock is approaching $50 level, right? So what I'm going to do is I'm going to go back to the trade section, and I'm going to look at 50.5. Okay, that's my add the money strike. So I'm going to right click on this on the ask side. I'm going to right click on the ask side. If it's call or put, you have to make the order through the ask side. But how it's played out, I'll tell you. So I'm going to right click on the ask side, go down to send AMD to 3, which is blue. So right click, send AMD, blue. When I go back to the charts, first thing right here is, look, what was the color of my active trader? Blue. And what I got on there now is AMD 100 weekly, 31 January, 50.5. This is the price right now. Now let's say I was putting an order in. How am I going to execute my order? Because I can execute either the market, I can execute buy market, sell market, and this is my quantity, and this is my bid side and ask side. So the way it's going to be done is, number one thing to look at is, bid is where buyers are willing to buy it at. So let's say the most current 3 bids are these right here. What's happening here is, this is the most current, let's say 3 asks. Buyers are willing to buy it at 235, 233, 234, 232, 231. Around these areas is where buyers are. And this 29 means 2900. How? Because you multiply 29 by 100. And this 3 means 300. This 10 means 1000. So if I execute a buy market order, my order is going to execute anywhere around these areas. Anywhere around these areas, right? So what I can do is, either I can be guaranteed, let's say if I see it moving and I don't care about a cent or two, what I can do is collect your quantity, how much you want, make sure it is on auto send, and all you have to do is click here. That's it. Once I clicked here, my order, let's say if I wanted three of my contracts, I will buy it at $2.37. That's it. Yes, you cannot see your profit and loss here. For you to see the profit and loss, you have to go back in trade tab and look at the way we view or monitor. But now, let's say I wanted to sell it, and this went up, and now buyers are at these levels, right? And sellers are even on top. So let's say this is where the buyers are sitting right now, 243, 242, and 241. I bought it at 237 right there. Now, 237 to 242, that's about $5 each contract. And let's say I made 15 bucks so far. And I just want to execute my order because I think it's right time for me to execute. All I have to do is I have to click over here when I see the numbers on the buy side, and then 3 of my contracts will be sold towards the buy side. And I will also show you guys this on demand right now when I make this AMD trade, but I don't know if on demand will let me use the active trader, but I will try my best. That is the idea of active trader. Now, one thing to keep in mind is what I do is for my charts, I keep the color same. Red color, red number one, red number one. My active trader and my time and sales is also red right there. So what's not same at the moment is your active trader. Why is it not same? Because if I make this red, then it puts me towards the stock, not the option. Now I have the stock AMD open, I can buy shares, but not the options. So when I keep it color, let's say XYZ3, I can go back to the trade tab and I can look up anything. I can literally go to Tesla and I send this to blue and I go back to the chart and I see that, okay, now my Tesla is here. What I can do is if I want to go to the Tesla's chart, all I have to do is on one of them, I need to go and write Tesla. And now, next thing we know is I have Tesla level 2, time and sales, my different time frames, and my active trader order. All right, so this should cover the active trader. Any more questions, let me know, but I'll try to do this on demand too. Now, let's move towards the another big part, which is I'm going to go back to the regular charts, and now let's go over the level 2 and time and sales. I'm going to show you an on-demand trade, and I'm going to walk you guys through the tape on that. But let me go over just the basics of level 2. So what is level 2 and how do you get it? So level 2 is right here on the side. Once you click on this, a tab will be open, which is level 2. What does level 2 do? Level 2 is a order book. It is a order book of all the orders executing from the buy and sell side. Now keep it in mind, what we're talking about right now is all the orders getting executed towards the buy and sell. That is how we look at the volume. But the one thing about level 2 is that this is all the limit orders. This is all the limit orders, because in a limit order, you're asking and you're bidding at the price. You're not just sitting there and clicking and buying for anything. You're basically demanding a price. So the way level 2 works is level 2 has two sections: BS, bid size, AS, ask size. This right here is the current price of the stock it's running at. This is the ticker symbol. Now this right here is the bid section, and this right here is the ask. So right now on the bottom, what we see in the bid is 320, and on the ask I see 322.82. When we look at this, what does that mean? The bid size says 3 and the ask side says 1. That means this 3 is multiplied by 100. So basically, someone wants to buy 300 shares of BA at the price of 320, while on the ask side, someone wants to sell 100 shares, since it's 1, at the price of 322.82. So what do we see right now is someone wants to buy BA for the price of 300 shares, and someone wants to sell 100 shares for the price of 322.80. That is the idea of level 2 as far as right now. This is just the basics of it. When you're actually trading, the problem that we come across is there's different exchanges we're going through. There's different bid orders that's coming to the exchanges, and different kind of size that's coming on the exchanges. Same idea with the ask, different exchanges, different price points for every exchange, and different ask size for every exchange. Your job is to read the most recent ones along with time and sales. So if the idea of level 2 is cleared right here is, I'm going to go one more time over it. Bid is the price buyer is asking to buy it for. Bid size is the amount of shares buyers want. Amount, I gotta do it again. So right here, bid is buyer's price. And bid size is amount of shares. Same idea over here is ask is the seller's price. And ask size is the amount of shares. So in these both conditions, what we know as far as right now is we can read how many people want to buy and how many people want to sell. But is that the only idea of what we want from level 2? No. As we go more in depth, what we're looking forward from level 2 is we're looking at the amount of shares that buyers want to buy and the amount of price they're willing to pay for it. We look forward for the bid to increase as we see the stock going up, and the reason behind that is that makes us assured that okay, the buyers are willing to pay more and more for this because they're aggressively buying it. At the same time, sellers also do increase with the price as the price increases because now sellers are selling it more expensive, but more load is towards the buyer side than the selling side because now buyers became aggressive. Now let me go ahead and walk you guys through the play I played, and I actually posted it too. And one of you guys asked me to actually go over that play too, but I couldn't. So I'm definitely gonna go over it right now uh along with the whole play. So I'm gonna go back to my flexible grid, and I am going to on demand January 16th, 9:53. I think I got it around 9:55, but let's see. And it was AMD actually. And I'm gonna go on trade. What I'm gonna do is I'll go ahead and make also a order of AMD real quick. So if I can actually execute that order, like let's say 50 strike price to blue, if I can execute it, I'll show you guys how to use the active trader too. I see right here, right? What do I see? When I was trading this, I was going through a few things. The first thing I was going through is right here. The stock ran, first stock gapped up, and I think it had a catalyst that day, gapped up, and it started running in the first few minutes, right? So if I go over the 5 minute right here, when it got way too overextended out of the Bellingers, I saw it coming back down, and I like seeing that in every stock because now I have an opportunity to get if I miss this whole run. So I stay patient, and if I go over 5 minute right now on the EMAs, let's see what happened. And what happened on the 5 minute on the EMAs is slowing. While that's loading, look over here, right? Same thing, level 2, whole bid side, ask, and the ask size and the bid size. Bid size. As I told you guys that it's not something one bar, or just one thing written. There's different exchanges, NASDAQ, BATS, ARCA, everything is different that we're going through. Every exchange has orders coming and they're flowing their orders on the bid side, and every exchange has sellers sitting too because we are trading through different exchanges. So now I want the 5-minute chart to come real quick so I can move forward. Let's see. Give me 1 minute. Because the time and sale itself isn't working either. Earlier it was, but now it's not. So let me actually do this. I'm going to go a little back in the time and try to see what I can do. So give it 1 minute and let's just let it load. Alright. Alright, so it's not giving me time and sales, but I'll still go over the idea of it. But let me go back around 54, because that is where the play gets started, and that is what actually we want. Okay. So I think I got in around 9:05, and I do still have an order. I'm gonna put up on my phone, so I'm pretty sure what my executions were for that day. But as far as I know, it was around 9:55, and yes. So I did buy strike price 50 at 9:55 for 38 cents. 9:55, yes, 9:55 a.m. Now let's look at my entry and exit and why I entered and why I exited and how I was reading the tape. And actually, in what levels can you even read the tape, right? So well, that's now I should be looking. Okay, right there. So 9:55, when I saw this big push on this right here, that is when a lot of orders flew through time and sales. Time and sales is right now in green, and big orders flew. So when I was watching, I executed my order around this area. The reason behind that is after the breaking out of high, the premiums are going to fly as soon as it breaks out. So let's say if I execute my order around this area right now, if it executes or not, let's see. Now I want you guys to look at time level 2 right now. As far as right now we know is it's at 49.75, and right now bid is at 49.76. Order is executing at 49.67. It's delayed on the time and sales, but right now orders should be flowing for 49.75 and above. So as we move forward, what do we see? The size of the bid and the ask, right? Our job is whenever we're looking for a breakout, as it broke out over here, it's going to break out one more time. Since I remember it came back down, waited, and went back up. So our job is to look at it this way. Look at the bid size right now, 120, 24. So that means that big orders are sitting to buy, and if they flow through time and sales and see those numbers going through, anything over 200 is what you want to look at. 50, 1, 2, 5, that's now something you want to look at. So now, as we see, it's getting stronger. Why is it getting stronger? First thing is, it made a high of 49.81. For me to even, if I was playing a breakout, I would have waited for the breakout to happen and as a stock to hold above this level. So if the candle is not going to close green and I don't see a green candle coming up, I'm probably not getting in as a breakout. Second thing for me that is level 2. 49.76. What do we want? We want orders to come above 49.81 and flow through time and sales right now in order for us to see the stock running on the bid side. That is what you want to focus on when you're actually trading a breakout towards the upside. In this case, we're looking at, okay, the numbers 15, 13. That means this many shares want to execute at these levels, and time and sales should be flowing those. Right now, we're on demand, so we really can't see it that way. But moving forward, I'll try to record something with actual real time so we have a better understanding. But now keep watching it, right? Keep watching these numbers. Keep watching the numbers and see how the bid side increases when the numbers go over 49.80. So that's our job to look at right now. I want to look at numbers going over 48.80, and I want to see how the bid increases. So 49.77, 49.76, and right here. Yes, right now the orders are actually flowing at 77, 77. A lot of buy. Look, 4,500, 3,200. A lot of buys coming. A lot of buys coming in. And for 80s came, 80s came. Right here, 80s came. For 79s are flowing now. And now, as soon as it's ready to break out, you see 82s. Okay, here we go. 82s flew, and then now the stock broke out of it. The size is getting bigger too, and buyers are getting aggressive now. Now you saw that 220 on the sell. At the same time, you guys do need to understand, as far as level 2 is one of the great indicators that we can look at, level 2 can also be something that will get you into a fake out. All of these orders sitting here does not mean they need to be executed. These big fishes in the market can always throw an order and take it back and cancel it, which means that they will throw a big number and they will take it back. They will throw a big, they will take it back, just to fool you and me, just to fool the retail traders and not anybody else. As far as you have to see is, you just can't look at the level 2, you have to look at the time in sales. You have to look at the big numbers in green or red flowing and see how many shares are actually getting bought or sold. Earlier I saw 6,000, 4,000, 3,000. So all of these, like another 6,700, 2,000, this is showing me that big buys are happening right now. Now, if I'm playing a breakout, my mental stop loss is below possibly a EMA or a major sell-off or a reversal if I get caught into a reversal or a fake out, right? As far as right now we're seeing is we're still holding above the 49.80s, and now we just want to see it running from these levels and buys coming in. So keep watching and keep seeing 49.86. If the bid keeps increasing towards the upside, along with the ask and the orders flowing through time and sales in big sizes, another high again, we should see the stock running in that direction. Along with that, that is just the tape, but you do want to keep in mind is volume. Over here, what happened? Look at the volume. Volume for past few candles, and then volume for this candle. The breakout, for a strong breakout, one thing you want to have and know is every strong breakout will have a strong volume, and the strong volume will hold the volume certainly towards the upside there. So now while I'm looking at this play, I did execute my sell order around 10:09 a.m. So I got it at 9:55 and I got it at 10:09. So as far as right now we see, one more thing is, keep one thing in mind. Level 2 and time and sales work the best at crucial areas. While the stock is running or consolidating or moving, you will not see anything crazy. And there is no way, if a trader comes up and says, oh, you can read the tape minute by minute, yes, you can. But that's when you wouldn't see it when you were actually in the play. Like if I'm in the play right now, I want to see level 2 bid going up. I want to see green orders executing. I want to see buy side getting stronger and stronger by the minute. At the same time, if I was watching the breakout, that is when the big play comes in, if I can read the right breakout or not. If I can read that, yes, actually buyers are strong and they threw the size through the time and sales, or buyers were not really strong. So in this case, what happens is, what I really watch my level 2 at as is if a reversal is happening from an EMA, 5-minute, 9 EMA, a break above or a bounce off of VWAP, or it could be a bounce off of a key level. Anything like that is a identification for me or a breakout for me to watch the level 2. And then if I take that play, I'm keeping an eye on level 2 certainly all the time, because now I want to see the level 2 getting stronger, and I want to see the play move in my direction with the right pace. That is obviously my goal. So I will go to a little couple more minutes further, see what happens. Let's say I think I executed my one when I said I think 10:09. Yes, so I'll go at like 10:07, and I'll walk you guys through price action on this one. So look at the price action. Once the charts are up, I'll show you guys what I'm talking about with the price action. Everything, if you cover it together, the level 2, time and sales, price action with the volume, and right amount of risk that's involved in your trade, then there's no way for you to not grow in the market or grow as a account or anything, because now you should have proper identifications that, yes, I know what I'm doing, I know how I'm moving, and I know what I should be doing. Now, what comes to my mind as soon as we approach this number, 49, higher numbers than 49, $50 level. I need to watch $50 level, and I need to watch if buyers are willing to give me above 50. So when the stock broke above 50, this is where it broke above 50. When it broke above 50, there was crazy volume with crazy bid size, and a lot of orders flew through timing sales. That means the breakout was very strong. I scaled some out around this area already when I was playing it, but now my next chunk was taken out when I really started seeing that, okay, it's way too overextended for me. I don't see anything else on the sell side. I don't see anything else on the buy side. It's running. But as far as I see the chart, with the regular amount of catalyst, it needs to come back down. It's just too much now. For me as a trader, for other people. So next red candle I see, I told myself that, okay, another red candle is just my exit, and I'm going to exit the stock right away. So as far as we see right here, 90 is kind of overextend, kind of has a extension between the stock and the 90 EMA, about 20 cents, which is fine, but at times you want to see stock coming back down to those levels for you to run. So as soon as I saw this red candle, I told myself I'm out, and I executed my sell order. And on 10:09, when I saw this rejection, I executed my sell order. It's a lot to do it at the same time. Yes, when you're looking at price action, when you're looking at level 2 and time and sales, executing the order, different charts, it is a lot to do. But one thing to keep in mind is that if you're not going to do a lot, you're not going to make the right plays at the same time, if that makes sense. So you have to make sure that there's a lot for you to do so you can actually make the right plays. Nothing can be distracted. Nothing can distract you to the point when you're actually trading like that, because it just it's just not going to be mentally right for you, and your trades are going to be based off of just emotions. That is it. All emotions. So I'm going to put my order at like 64 maybe and see if it executes, because this is on demand. It really doesn't execute the right amount with the right time. And worst case, if it doesn't go, I'm going to execute a sell market. Okay, it got executed at 62 cents. Fine. So if I go back to the monitor, I played AMD, $230. That's not the point to look at. Let's look at this. I executed an order of 10, 50 strike price at 39 cents. So basically $390 for 10, right? I covered the position at $62, which is $620. So 620 minus 390 brings me up to 230. So my position size, well, let's say on this, well, when I played it, I had about 40 contracts, and that was not even a big position. It's about a 1K position, I think, or maybe a little over 1K. But in this case, the reason I'm showing you guys this is because these stocks make these kind of moves usually every day. Now keep this one thing in mind. Keep this one thing in mind, please. Disney, AMD, JPM, which is JP Morgan, Facebook, um, CGC, and what else was I gonna say? Can't remember the name right now. Possibly INTC, Intel. There's like 10, 12, 15 stocks like this in which they're moving stocks at the same time. Their contracts are cheap. Let's say JP Morgan, right? 35 cents. Like, okay, this was way back, but let's go back to the real channel, not the on demand, and let's check JPM. JPM, $1.54. These are the kind of stocks I really do want you guys to trade rather than trading those Teslas, Apples, $500-$600 contracts. That's not something you want to trade, because I personally myself trade these kind of stocks, and I go anywhere from 40, 50, 60, 70 to 100 contracts in there. And my goal is to make anywhere 500 to 700 to $1,000 a trade, and a few trades like that a day makes up my day. At the same time, your job is go lower, but there's a lot more profit margin in the smaller stocks, which I will later today when I do the watch list. I will definitely post it for you guys and show you which ones to look at. So now we have covered the market, SPY. I covered the IV. I did cover the active trader. I did cover the level 2 and time and sales. So now there's not a lot to cover. There's just some to talk, which is right here. Right here. So marketwatch.com allows you to look at the calendar for the economy, which is whatever is coming, economic calendar, which is coming next week, whatever is happening, what do you need to look at for the market, or any kind of things that market needs to look at. So for next week, what I am personally looking at is jobless claims and these two things. Wednesday and Thursday. Wednesday, Fed is announcing the rate cut. Either it's a cut or whatever the case is, we'll see what happens, because a rate cut can drive the market up. And then Powell is going to be speaking the same day at 2:30, in which now that actually gives us a better understanding of if the cut is going to stay cutting or if the cut is going to keep just staying at the same levels. Fed has promised the market, or Fed has promised actually saying that they will cut one time this year, at least one time in 2020. So that cut could be made right now or later, and let's see what happens on Thursday. Besides that is weekly jobless claim. That's something market looks at every week, and that's something that drives the market up or down. It's a really good catalyst for us. If we see us having lesser claims by the week, that supports the argument for us to drive up. If there is more jobless claims, then that shows us that, okay, less jobs are given, while there should be this much a number. So that actually throws the market back off and gives them a reason to sell off. So a couple important events to look at next week. Now let's look at the UI map. As far as right now we know about Friday, we are red all the way. From Google to Facebook to Microsoft to Amazon, Disney, Walmart, Apple, Fiji, everything as you see, J&G, anything you see is red. JPM, WFC, whatever financial sector, property, consumer goods, service, basic material, healthcare, technology, we are big red. That means, as I said, this red could continue, or this red could be turned into green. And how that would happen is that could be happened by this right here. So next week we have a lot of big names releasing their earnings. As far as I see, some that I will probably myself be looking at is 3M, Apple, AMD, Starbucks, eBay, Boeing, Tesla, Microsoft, Facebook, PayPal, McDonald's, Lion, Coca-Cola Company, Amazon, Visa, what else? Biogen, and then EA right here. Possibly Nokia and Verizon too. And that is it. Yes. And then Caterpillar right there. Caterpillar on Friday. So there's so many earnings to look at next coming week. And these earnings can either drive the market towards the upside or downside, and we can see whatever is before open or after. I will definitely post this in the group chat too, so we know what's coming up and we'll keep talking about it. But things to look at is IVs of the option contracts. You are looking forward to play it. I don't recommend you playing earnings unless you're willing to lose the total amount of the money you're putting towards it. If that's the case, then go ahead. If not, then no. So this is one thing. And then if you go on earningswhisper.com, you yourself will also see, if you go by the date, you also will see what earnings are getting released and what is the growth. You can actually click on the company. You can read a little bit about their description. They will give you somewhat, so which is also not bad. So with that being said, I have covered my whole webinar and this was pretty good. I think you guys will get a lot of knowledge out of it. Moving forward, just let me know. I will try to be more consistent since we have a lot more sessions coming up and I have a session scheduled already. So we have a lot more people being active in the group chat. I want you guys to be active too along with me. The last week was kind of slow for me, but moving forward, we will be active and we will talk accordingly. Just have a routine, have a plan, and everything, and stop worrying about this. Worry about what we're doing tomorrow. Yeah, he was a legend. He's gone, but let's worry about what we need to do tomorrow too, okay? So with that being said, I'm going to wrap this up and I'll upload it and then you guys can go ahead and watch it. Thank you so much, guys. I appreciate it.